Now, welcome back to another lesson. This lesson, we shall be having it on every Tuesday at 8 p.m. And we shall have economics on this particular lesson. It will be a 3-month lesson anticipated, but by end of November, we shall have completed this course. Okay, it is CPA foundation level, and I will be the lecturer for this course. And I've given you my contact just in case as we move on, you have a particular question or an area of interest, then I will be available for you. Now, economics, we shall look at the general objectives, what is expected of you. One, you are told that this paper is intended to equip candidates with knowledge, skills, and attitude that will enable him or her to apply fundamental principles of economics in decision making. So, this is the general objectives of this course, economics. Remember, after foundation level, you'll advance to intermediate and move on to the next stage. So you might not find this content again, but as this particular stage is important for you to understand, and I will take you through the content that will be taught in this particular course shortly. Now, what a student or a learner is expected to achieve, we had said that a candidate who passes this paper should be able to do the following. One, a learner should be able to apply basic mathematics and graphic techniques to analyze economic relationships and interpret the results. That is one of the outcomes or what a learner is expected to achieve. Two, apply the knowledge of economics in decision making, analyze the economic problems, and suggest possible policy-related recommendations. Apply knowledge of economics in international trade and finance. Apply economic principles in the development and implementation of policy in agriculture and industry. Finally, demonstrate an understanding of emerging economic issues. This is just an overview of what this course is intended to make a student look like. Now, let's look at the content of this course. Here, we shall have topic-wise. The first thing you're going to look at is microeconomics. By this topic 1, we shall look at what is definition of economics, and we differentiate between micro and macro economics. We shall discuss this in details as we move on. We shall also look at the methodology of economics and its basic concepts. We also expected to look at economics description and analysis. We also look at definition of what is scarcity, choice, opportunity cost, and production possibility frontiers and their curves. Economic systems, where we are looking at what is free economy, what is planned economy, and what is a mixed economy. We also look at specialization and exchange. That will be first topic. We shall move on to the next topic, and on this topic, we shall look at demand and supply and the determination of equilibrium. Meaning, first of all, we need to understand what demand is. We shall do what we call demand analysis. We look at definition of demand, individual demand versus market demand, factor influencing demand, exemptional demand curve, types of demand, movement along and shift of demand curve, elasticity of demand, types of elasticity, price, income, and cross elasticity. We shall also look at measurement of elasticity, point and arc elasticity. Finally, we look at factors influencing scarcity of demand. So this is the second topic, first subtopic. We're looking at what is demand. We shall also look at what is supply. Yeah. The same thing, we shall look at what is the definition of supply, individual versus market supply, factor in influencing supply, movement along and shift of supply curve, definition of elasticity of supply, price elasticity of supply, factor in influencing elasticity of supply, and we also will end up with application of elasticity of supply in management and economic policy decision making. So you can see that just a screenshot of what demand and supply look like. There is a lot we need to learn in this particular area. Now, when demand and supply curve meet, they are going to introduce what we call equilibrium. So we are saying we shall look at determination of equilibrium, interaction of supply and demand, equilibrium, price and quantity. We shall also have mathematical approach to equilibrium analysis, stable versus unstable equilibrium, effects of shift in demand and supply in the market equilibrium, price control, reasons for price fluctuations. Now, this is a short and also a wide course at the same time. Yeah. So you see, this is a short and a wide course at the same time. I cannot tell you that if you don't read, then this one will appear very long. Now, having explained about determination of equilibrium, we move at the next thing that we're going to look at. The next item that we are going to look at is, we have, of course, you can see that was a continuation of isocart, and these terms, I don't have to explain them in details now. What we mean by isocont and isocart lines, the concept of producer equilibrium and firm's expansion curve, laws of returns to scale, demand and supply. So basically, this topic of economics is divided into two areas. There is a microeconomics that deals with economics of an individual, and there's a macroeconomics that deals with the economy of a nation. So once you understand the basics about this, and of course, I can assure you that there will be too much computations as we move on. Even the mode of learning will change because I will be giving you questions. You will going to respond, and I shall also give you a marking scheme, and we mark your work together. So there will be integration of different modes of teaching. That means you will have to come on board. I'll also give you question. I'll also give you assignment so that at the end of it, there is a precise goal that is going to be achieved. Now, these are some of the topics that we are going to look at. There will be money and banking. We shall look at the banking system. We shall also look at international trade and finance. And we end up with current developments plus emerging issues. So those topics that I've listed there, I will still share the course outline, but we are going to discuss them in depth. so that when you are approaching your exam, you'll be well equipped to sit for exam and pass. Now, let's just do a quick introduction. This being our first lesson, and I'm seeing quite a number have not joined. Maybe I will inquire from them whether the timing was an issue. But let's get started with the first topic. Introduction to economics. You see, this term economics, even a layman will understand or will tell you, you guys have not done economics. You don't know how to use your money well. I'm an economist because once I receive my money, I know how to budget. So it therefore shows that this economics can be defined in so many ways. You cannot say that this is a particular way to define economics. Somebody say when our economy improve, when the economics of the country does well, when you see there's each and every person will have his own or her own view on what economics look like. But we shall look at some of the scientists that had taken time to define economics. And one is called Alfred Marshall. He said that economics is the study of man in the ordinary business of life. That means whatever we do in each and every day comprises of economics. When you want to get your money, board a bus, board a matatu, take a ride, plan for food, in our business way or in our ordinary business of life. Ordinary business, that means how a human being interact within him or herself. When the business term comes in is when the finances are now involved. Then this define economics. So according to Alfred Marshall, he said that a study of man in his or in the ordinary business of life, then it is economics. An American economist by the name Paul defined economics as the study of how people and society choose to employ scarce resources that could have alternative use in order to produce various commodities and to distribute them for consumption now or in the future among various persons and groups in a society. Now, this American economist define it in a long way, but he has said that how you apply or employ your scarce resources so that you can, these scarce resources have alternative use, but you have decided to allocate them to a particular agenda, to a particular project, so that it produce various commodity and you're able to distribute them for consumption either today or in the future. That is according to American economics. Now, when you're talking about a word scarcity, scarcity is used in economics to mean all resources are scarce in the sense that there are not enough to fill everyone wants, to the point of like it's a point of lack, what do we call this, satisfaction. Yeah. So in this case we are saying a scarce resource means it is not enough to make all your needs fulfill. Yeah. So here we are saying that when it say that a resource is scarce, it is not easily available. Let me say this. When you have free supply of air, then that one is not a scarce resource. Huh? A scarce resource is not enough. It's not enough to satisfy your needs. Yeah. By want, we mean a materialistic desire for an activity or an item. Human wants are infinite. You see, a want or our human needs, when you achieve one item, you think of achieving the next and you think of developing more. So there is no that particular time a human being settle down and say, I have achieved enough. Yeah. Most, not even one. You see, when you say you have achieved enough, your heart means there is nothing else you want. It's rare. Very few people reach that particular time or that particular stage. So we are saying that if you're referring to a want, you're saying is a materialistic desire for an activity or an item. Now, we have now assembled the three vital ingredients of our definition. We know who are people. In this case, we are talking of human wants. We are talking of scarcity and choice. Now, let's look at the scope of economics. Let's look at the scope of economics. And they're saying the study of economics begins with understanding of human wants. Remember, according to Alfred Marshall, economics is the study of man in the ordinary business of life. So, the ordinary business of human being or the ordinary business of a man, it is struggle to achieve your wants. Therefore, the scarcity forces us to economize. Let's look at it. For instance, you are receiving a salary of 100,000. You match this salary against your wants. You'll find that there is a particular want you will not spend fully as you anticipated. You are economizing. So this economic is brought in by the fact that you are only limited to 100,000. If this 100,000 increases to 1 million, your want also increases. So we are saying that the scarcity of these resources make us to economize. Although economics is closely connected with such social sciences as politics, sociology, psychology, and anthropology, it is distinguished from them by concentration on one particular aspect of human behavior, choosing between alternatives in order to obtain maximum satisfaction from limited resources. Politicians, given a budget of 100,000, will choose projects that will make the citizen appreciate his effort. Now, which project to choose? It is now what we are referring to here, or we are putting it here, that you have to make choices. You are making choices to get the best alternative. Yeah. So between politics and economics, we are saying choosing between alternative in order to obtain maximum satisfaction from limited resources. You are presented with several options. Now, as an economist, you have to choose the option that is going to maximize your satisfaction. Remember, all options they will be presented to you. The economist differentiates himself from politicians from the fact that the economist will be looking for an option that will maximize the satisfaction. Politicians will look for an option that will make the members or the public happy. Now, we have mentioned about wants and what economics will look like. Now, let's look at these resources. We are saying that these resources are scarce. Now, resources in this case, we are saying the ingredients that are combined together by an economist and term economic good. We have goods that are scarce in relation to demand for them. Economic good basically means goods that bring value. Yeah. These are goods that are scarce and they have economic gain. Now, when we're talking about economic good, we are saying all things which people want to lump together by economists and term economic goods. That is, goods that are scarce in relation to demand for them. Listen, something of economic value is not available to anyone. That is, something of economic gain, something of economic value is what we are calling economic good. Then it is not available to everyone. It is scarce. Even you, when you want to get it, you have to plan well. Yeah. If you are all able to breathe oxygen, oxygen becomes an economic good when you are not able to have it. You have to spend for you to acquire oxygen. But if it has been provided freely by God, as we all do, then it loses from being an economic good. You cannot store it unless someone now really need it. That is the point. Now it become an economic good. But if it is available to everyone, so simply what we are saying that an economic good, one of the features or characteristics of an economic good, it is not available to everyone. It is scarce or it is limited in its supply. Now, the difference between an economic good and a free good is that free good, these are goods which people can have as much as they want. Yeah. So if you have if you are an economist, you are planning or choosing an option that is going to maximize your satisfaction, then you have to choose an economic item that you're going to dispose or you're going to sell and get economic value that is going to satisfy your wants. Now, I mentioned at the introduction that this course is divided into two parts. If you are able to choose one of the area that you are going to understand well, if you're not able to understand both, but if you can be able to understand both, the better. But either of the two, there is always an area or one of it is simpler and easier to understand than the other. although now being in an economics lesson, it means you are ready to understand both. We are going to deal with microeconomics. This is an economics of an individual, and macro. Macro means bigger, larger. Micro means smaller. So microeconomics is a branch of major economics. We are saying the study of economics is divided into two halves. That is micro and macroeconomics. Micro comes from the Greek word meaning small. And microeconomics is the study of individual economic unit or particular part of the economy. How does an individual household decide to spend its income? How does an individual farm decide what volume of output to produce or what product to make? How is the price of an individual product determined? How are wages level determined in a particular industry? This gives a warm eye view of the economy. So when you're talking about microeconomic, we are talking of economics of an individual, whether an individual company, individual community, individual, something small in nature. But when you're talking about macro, now you figure out a whole country, figure out a whole continent, figure out macro, the bigger one. Yeah. So you're talking about macroeconomics, come from the Greek word meaning large, and macroeconomics is the study of global or collective decision by an individual household or producer. It looks at a national or international economy as a whole. Total output, in this case, we are talking about what a country is giving out against what a country is getting. So when we shall be dealing with macroeconomics, we shall look at the GDP of a country, how to compute inflation. We shall look at the employment level, the interest rate, balance of international trade, etc. We shall figure out even the exchange rate. What are the effects of exchange rate and the rest? So this particular topic or this particular course, economics, revolve or is divided into two, microeconomics and macroeconomics. We shall begin with the microeconomics and end up with the macroeconomics. And this is a course that demands that you be attentive and do a lot of practices. It's a simple and hard course at the same time, depending on how you take it from the word go. Now, we are saying that economic theory, a body of economic principles built up as a result of logical reasoning. It provides the tools of economic analysis. It is pursued irrespective of whether it appears to be on any practical advantage or not. So therefore, we are saying the economic theories, we are going to proceed there in our next lesson. So this lesson is our introduction. And for the sake of those who came late, I want to revisit where we started so that we move at the same pace. We looked at what are the general objectives of this course. And we said that the general objective is that this paper is intended to equip the candidate with knowledge, skills that will enable him or her to apply fundamental principles of economics in decision making. Then we also looked at the topics that will be taught, beginning with the first topic being microeconomics. And we ended up with the last topic, which will be taught on macroeconomics. We shall look at macroeconomics as the last area. Otherwise, this being our first lesson, I expect that by the time we meet on Tuesday next week, we shall be ready to move faster and also be ready to write notes. Now, when it comes to notes, I will be sharing these notes to your email. Each and every lesson we are done, I will share the content to your email. And also these lessons are recorded so that you can refer them in the future. Otherwise, is there a question? Any question? You can unmute. Unmute. I can't hear. Unmute if you're talking. Unmute. Press the microphone. I can. Yes, now I can see the microphone. It's okay, huh?
No question.
Okay. Now,
understood.
Okay, this is our first. We shall be meeting on every Tuesday. I hope 8 p.m. is all right.
Yes, it is.
Yeah, we shall be meeting on every Tuesday, and I expect next time we shall cover a lot of things. This being the first lesson, we better stop there and prepare for our next lesson on Tuesday at the same time through the same media.
Thank you.
Okay, welcome.
Bye.